So let's look at the relationship between volume and price. Standard price bars have an open, a high, a low, which we call a range, and a close. Volume spread analysis analyzes the volume distribution as it occurs over this entire price range, be it a tick bar, range bar, price bar, whatever time bar it might be. It's analyzing that, and you're looking at a distribution of volume as it occurs over that price bar. What volume price analysis does is it looks at the two. It looks at the open, high, low, close range, standard deviation, average true range of price over several bars, couples that with the spread of volume that occurs over this bar, and is able to give you a very accurate representation of what is occurring during that bar. It's either going to be heavy selling pressure, denoted by red, heavy buying pressure denoted by green, or neutral, a very even distribution. So you can see, looking at the node, this is a nice bell-shaped curve that's very close to the bottom. The close is at the bottom, that you can see why this would be painted red. However, if you had like a bimodal distribution that was evenly weighted at the top and the bottom, you might have a white volume bar that might show equal pressure on the buy and the sell side. But if you see a close in the low, but then you see a bimodal distribution where you've got the majority of the volume up in the upper part of the price bar, then we would probably be painting this bar green, even though the close is in the lower part of the price bar. Because what we're doing is we're analyzing it to determine, based on volume and price, really where the true action lies. And that's the important part that we want to get across to you today, is that volume and price work together to help you to see that. Now, I refer to volume as dumb volume in most volume that you see, because the volume is colored red only if the close is less than the open. The volume is colored green only if the close is greater than the open. I call that dumb volume because it doesn't look at anything other than its relative position to the open. If you integrate volume spread analysis with it, then you have a game changer. You have an edge. You basically have a more sophisticated way of trading. It's more like forensic analysis than it's technical analysis. And it's a way to see trades more clearly. You know, it changes how you perceive the charts. You know, it changes how you place your trades because you see the true structure and underlying segments of the market. It helps you to keep profits that you make, and it helps you to protect your positions because you can see what's happening in the market.